Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Thursday, February 26th, and my name is Raleigh White, and I'm coming to you live from a beautiful sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a special focus on seasonality and what we need to know about it. He's going to begin today by giving us a midday market analysis and what his updated stock watch list is. And then we're going to pivot. He's going to talk to us about what seasonality is and why it's important to know about when trading stocks. He's going to share with us how to use seasonality when making trading decisions. Also, he's going to talk about what profit windows are and how we find and use them. And then, folks, exciting stuff. He's going to talk about time spreads and how to use them to trade around earnings. And then he's going to do a demonstration on an example of how to set up a time spread. So exciting stuff today. Continuing master session this week on how to trade options to take advantage of opportunities in the markets. And today, the focus is going to be on seasonality. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, folks, the chat is open to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever, and keep those side conversations, that chit-chat between one or two of you to a minimum, because all it does is interfere with the rest of us that are trying to listen and learn from the education information that Roger is sharing, because after all, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, folks, if you were with us this morning at 8 o'clock Eastern time for Roger's pre-market briefing, you'll note that there were several key catalysts that we needed to be aware of. On the mag front, we noted that NVIDIA was up 1% coming into the open, and a lot of eyes were on NVIDIA's earnings release and how the market was going to respond. On the technology front, we noted that CRM, that Salesforce, was down 3%, and TDD was down a whopping 16%. On the consumer front, we noted that WBD, Hormel, HRL, and SJM were all getting ready to release their earnings before market open. On the energy and the utility front, we noted that VST and SRE and PEG were also all scheduled to release their earnings before the market opened. On the international front, we noted that the Euro stocks was up modestly 0.3%, but still that was all new time highs for the Euro stock, and the Asian markets were mixed. So we had a very, very slight tailwind coming into our open from the international markets. On the Fed front, we noted that we had jobless claims coming out. We have delayed retail and wholesale data. That would have been data from January, which was being posted today. And we had one FOMC speaker that was scheduled to talk today. Now, for those of you that are wondering, why do we talk about catalysts and why are these important? Well, from Roger's perspective, if there's information that's either known or will become known during today's trading session, but is not yet priced into the market, that represents volatility flashpoints that we need to be aware of if we're going to consider placing any trades with stocks associated with those sectors. For example, looking at consumer, a number of stocks getting ready to release their earnings before market open, we might have a little pause as to when we want to go ahead and place some trades with consumer-oriented stocks. Now, as far as Roger's pre-market watch list was concerned, he gave us 23 tickers to consider and to watch. On the short side, he gave us 8 tickers, and on the long side, he gave us 15 tickers. Now, folks, when Roger wakes up in the morning and he starts to look at what stocks are setting up nicely for him, that's what drives his watch list. Now, a watch list doesn't mean that he's automatically going to take these trades. It means that they have the potential to set up during the day for a possible trade. And if that setup matures the way he would like it to, then more than likely he'll take that trade, he'll post it in the trading pit or in one of the other premium alert services that he has. Now, once again, if you're with us in the morning, I'm sure you appreciate that Roger brings up the chart for each one of these tickers, and he tells a short story. He says, here's where it is, here's where I'd like to see it go, and if it reaches these levels or it bounces off this area of support, things along those lines, and I'm going to consider taking that trade. So it's valuable, once again, to be here with us in the morning as Roger goes through his watch list, and he's going to update that watch list for us in just a few minutes. Now, as far as Roger's pre-market thoughts are concerned, we noted that the futures markets were all pretty flat coming into the open, just not a lot of anything going on there. And once again, I was sort of surprised because I was expecting that the activity from NVIDIA was going to basically really have a very positive impact on the markets, but it just basically is a snooze fest coming into the open. We also noted that the put to call ratio was unbalanced, heavily favoring calls, which means just a little too toppy there, and Roger expects a pullback on that, but the PC ratio, put call ratio was unbalanced, favoring the calls. We also did note that the VIX had been moving lower below 18, and what Roger's hoping for is that it will continue to drop below that critical 18 level. Bonds, the SPY, the QQQ, they were all up in their range, just kind of consolidating there, looking to make a move higher. And the chip stocks, the SMH, were up sharply. As far as sector rotation is concerned, we noticed that there was a continuing move towards speculative stocks as they're replacing those defensive stocks in the top section of the sector watch list that we have, and the defensive stocks are starting to slide lower. And once again, we like to see it because the spec stocks kind of add a little bit of gasoline to the fire when it comes to driving stocks higher. As far as company from momentum is concerned, companies that were setting 20 and 90-day highs continue to significantly outpace those that are setting 20 and 90-day lows. So as far as momentum is concerned, the momentum is positive, or stated another way, there doesn't appear to be much momentum to the downside. From Roger's last position, he said, look, guys, we've got to be cautious today. Looking at what's going on in the overnight market, he wouldn't be a bit surprised if the SPY were to retrace, down to a key level of support, consolidate, and then move up in the balance of the day. That's kind of the pattern that he was seeing. And he said, look, and we all have to keep an eye on NVIDIA, especially after 10 o'clock to see what happens with the stock. And we notice that the stock has not been performing that well. And I think it's been dragging on the markets, but I'll let Roger talk a bit more about that. So as far as today's agenda is concerned, once again, we're going to be covering a range of topics with a special focus on seasonality and what we need to know about it. Roger's going to begin by giving us a midday market analysis, and he's going to give us his updated watch list. And then we're going to talk about what is seasonality and why it's important for us to be aware of that when looking to trade stocks. He's going to talk about how he uses seasonality when making trading decisions, what profit windows are, and how we find these profit windows and how we use them. He's also going to talk to us about time spreads, and this is a very, very interesting strategy here, and how he uses time spreads to trade around earnings. And he's going to go a little further, do a deep dive, and he's going to do a demonstration. He's going to share an example of how to set up a time spread, how it works, and when it makes sense to do that. So if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not to interfere with his presentation. Also, folks, please note that the chat is open to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic, no political discussions. Keep your side conversations and chit-chats to a bare minimum, because all it does is interfere with the rest of us that are looking to focus on the education and the information that Roger's sharing. Because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to the team. Let's say hi to Matt. Matt, I know you've been busy today. Keen, sharp eye on what's going on in the SPY. Roger, once again, I think you were You like to say that, you don't like doing predictions, but I tell you what, buddy, you're not bad when you lean in that direction because your lasting comment was, folks, I expect to see a correction in the SPY, not a huge sell-off, not a market crash, but just a sell-off there and then consolidation and potentially a move higher with all eyes on in Nvidia. And boy, did you call it, Roger. That's exactly what's been happening today.
Yeah, as a matter of fact, if you remember in the morning today, here here it is, right here. Let me share my screen.
Sure.
Remember this morning, this picture?
Oh
Bulls are
yeah.
starting to get a bit ahead of themselves.
Mm.
But what I said was this. I'll tell you exactly what I said this morning. What I said this morning was, let me just put my screen on. What I said this morning was this. I said that I think we're going to open up around here. We're going to wick this area right here, and then we're going to come back up towards the end of the day. It's exactly what I was saying, that I think we're going to open up, explore the price action, come down here, and then wick and come back up again. So far, we got 2 out of 3, and we were starting to make a comeback right here, but then we're taking a little detour. So let's see if towards the end of the day we will come back.
Right.
And I'll tell you, and I also pointed out this right here, that I think this may be the bottom here. Be careful right here because we may come back up, and let's see if I was right on that one. I haven't looked at the VIX since this morning. Let's take a quick look and see if I was right on that one too. Yep. There we go.
Yeah, look at that.
There you are.
That's not what you were hoping for, but you predicted
No,
that could
no.
happen. Yep.
Yeah. I said I said I don't want to see that happen, but more likely than not, that's what's going to happen. We're going to come back. And that's why I put these two things for you guys. Bulls are starting to get a bit ahead of themselves. Right here. Keep an eye on the VIX, already down 3 days in a row. Maybe time for some consolidation near the support level where I drew the circle for you.
Hmm.
Meaning we're not going to go down anymore. Already down 3 days in a row. That means the market's been going up 3 days in a row. So, and did it happen? Yes. Or did we consolidate around here? Yes, we are. We're consolidating right around here. So let's see if that continues. Now, with that said, I just want to make sure I want to make sure folks understand and don't misinterpret what I say. As far as the overall market, I really like the market here. I don't hate the market. The market's fine. It's just
Right.
we're still in a consolidated range, but all-time highs are right here. And look at SMH. Remember I said today that I think we're getting ahead of ourselves.
Hmm.
We're getting a little too far extended, and then we may have to come down. Remember that? I did say that to you. I said we're getting a little ahead of ourselves. This is too much on the T. Folks, all you have to do is watch the video if you haven't seen it yet, and you will see I said exactly those things. I think we're getting a little bit ahead of ourselves. But doesn't mean I'm expecting a bear turn or a downside. As a little more, you want me to give you a little more audio? I could do that. Let me see if I could turn up the audio a little bit. Let me do that right now. I want to make sure you guys could hear me okay. Microphone. Audio settings. Let me know if this is a little bit better. If
That's
that's
good. You're coming in nice and loud and clear.
okay, good. I want to make sure you guys could hear me okay. All right.
And
And if I
I
start,
think we should be pretty much in balance. That's what we're looking for. Yeah.
yes. And
Good.
if I start cracking, Raleigh, you'll
Clipping.
if I
Yep. I'll let
yeah,
you
yeah,
know. Yep.
please let me know. Yeah, sorry about that. I haven't really adjusted it or looked at it in a while. Anyway, so we're bouncing off the 15-day here. There's nothing really crazy. There's nothing really wrong. If you look at RSP, um, we're still in this range. There's really structurally, nothing has changed today at all. Nothing. Zero. Okay. So I still like the market. I still like what I'm seeing. But as I said this morning, we're getting a little bit ahead of ourselves. A little bit ahead of ourselves. That's all. Just a little bit ahead of ourselves. Just like when I told you right here, bulls are starting to get a bit ahead of themselves at 8:36 in the morning. So you can't say that I'm going back in time and recreating history. Okay. All right. All right. All right. Good. So and oh, here's what I wanted to say. I wanted to say one more thing. This is important. Um, if you look right here, you have 184 stocks right now making 1 month highs, 20 days. This is trading days, not calendar days. 184 days. And you have 59 stocks making 1 month lows. That's not a bear market, folks. That's not a crash. That's not even a correction. That's just the market burping and farting. Excuse my French. Okay? That's not really. There's nothing. I mean, look at 90-day lows. There's 44 stocks. My short list has 5 stocks on it. I couldn't even find any more. Let me show you. It's one thing talking about it, but it's another thing when you see it. So look, ugly. This one actually looks okay. I could have added that one to my list on high volume. That doesn't look bad at all, actually. Yeah. Oh, I see why. Because you got stuff here. Yeah, that's why I didn't. Okay. Way overdone. Way overdone. Way overdone. Way overdone. Still in range. Way too gappy. Way overdone. I don't like this pattern. Way overdone. Um, Not bad. It's okay. Too gappy. Way overdone. Just sloppy on my watch list. Ugly chart. Ugly chart. Overdone. Not bad. Not bad. On my list. Spotty and overextended. And let's look at the next page. Spotty. Just ugly. It's an ADR, ADS. This is disgusting chart. Choppy, choppy, too choppy, a little too much, way too much, way too much, way too gappy. Mm, that one actually looks pretty good. Let me add another one. What? Hold on. Um, this is a little too much right here. Forget about it. Forget about it. Forget about it. Same as that Watt we were just looking at. This is overdone, too gappy, and that's it. That's all the stocks making 3 month lows.
Yeah.
44 to 133. There's just not that many of them. I mean, look, this is the only thing. This is the only thing. Um, Look, TCOM, right? Nice chart. Tesla, nice downtrend right here. Hog, I showed you that one a minute ago. NTES, that's a nice chart. That was from the list we just looked at. And Watt, the one we just found a minute ago. That's it. That's my watch list to the short side. So where's the beef, right? Where's
Yeah.
where's the beef? Where's all this downside movement? No,
Yeah.
we're just chopping around. Okay. We're just chopping around, folks. And that's just what it is. It's don't you can't make too much out of this. You don't want to make more out of this than it is. Okay, just choppiness. So I'm not really seeing a lot of downside pressure or selling. I'm just seeing the market being really choppy, really really choppy. How have I been taking advantage of that choppiness? I'll tell you how I've been taking advantage of that choppiness. I've been buying stocks that are not breaking out, but instead I'm buying stocks that are confirming the 8 or the 15-day bounce. Do I always trade this way? No, Matt loves to trade this way. I don't like to trade that way at all. I like to do breakouts. But we can't do breakouts right now because the market's not trending. And
Mhm.
if the market's not trending, what do you think is going to happen to your breakout? Consolidation choppy. Why? Because all stocks, except small caps, which we took a profit on this morning in the high flyers, because the market's doing this. And when the market's doing this, There's no directional bias. And when there's no directional bias, you're not going to make money on breakout stocks, large breakout stocks, because this is what the market's doing. Okay? So I want to make sure you guys understand what I'm saying. Understand exactly what I'm saying. Nothing is nothing in if anybody ever tells you this is how I trade and that's the only way I trade and I don't trade any other way, run the other way. A professional trader will trade the best cards under the circumstances that the market will give you at any time. Okay? There's no such thing as a one type of trader. Because think about this. If I'm a breakout trader, I'm going to make a lot of money when markets are trending. I'm going to be the genius of the year. And then when the markets chop around, I'm going to give it all back. And then 3 years will go by and I'll be a genius again and I'll give it all back. No, who needs that? You know, no, but no, we don't need that. We don't need to be that person. We just need to be, we need to be flexible and we need to, we need to play the best hand at any given moment. That's what we need to do. That means the odds will be on our side. CMG, let's see. CMG. It's not doing anything. Choppy. So where do we go from here? So as far as the market is concerned, let me just delete all this crap here. I like to draw a lot of stuff, as you could see on my charts.
It's great.
There's a lot of stuff here. Oh, there's a lot of stuff. Okay. Oh, even here there's stuff. My God, I just can't get enough of these things. I need like 20. They should put 20 boards in here for me, Matt, instead of 10. You should see mine. Richie says you should see mine. Yeah, we like to draw on our charts. TC2000 makes it really easy to draw on charts. Okay. So where do we go from here? I honestly think we're just going to chop around here. We're going to play between the 100-day and the top of this pattern for a while till we get some clarity. As far as mags, remember what I said. It looks like we want to come up, but this isn't good enough. We need to be here. Okay, this is just minor things. The saving grace is we still haven't broken the 200-day moving average. Okay, and that is key. Similarly, SMH has not broken the 15-day. Look at that. Every time it comes back to the 15, it bounces back up. And we just made an all-time high, so I'm not really that concerned about this. Remember, I love pullbacks from all-time highs. My favorite pullbacks are pullbacks from all-time highs. I always that's the first thing I ever taught Matt. When I met him, that was the first thing I ever taught him. Pullbacks from all-time highs are the best, or swing highs are the best. Not pullbacks from, because if a stock couldn't make a swing high, that means you're not trapping anybody when it goes down. When it makes a new high, you have fresh buyers coming in. And when the stock goes down, all those buyers are completely trapped. So you don't want to be, oh, we trapped some. Oh, we trapped some more. Oh, no. You want to trap the highest level at the high because you're going to have so much liquidity there that the stock will want to come back up to test that level before coming back down. Because all those buyers that got in right here, all those folks who got in right here are going, oh shit, did I buy the high? And they're scared right now. They're scared. So if this comes back up here, a lot of these folks will be like, whew, I got my money back. Yeah, I got out and I got my money back. And meanwhile, and it just creates this thing, especially around all-time highs or near all-time highs. So be careful around here. But I love pullbacks from swing highs. My favorite pullbacks are from swing highs. Okay, because you're confirming price was able to reach a certain level, and then you're dealing with a bunch of folks who are trapped.
Mm-hmm.
Okay. So anyway, SMH is still looking good. QQQ just started breaking the 50-day, which is like the best thing ever. I want to see it up here. But so far, the lows, as you could see here, are getting a little better. So as far as I'm concerned, the trajectory is getting a little bit better. And a lot of what we're seeing right now is due to NVIDIA just being foolish. NVIDIA right now is making a higher low. So NVIDIA could potentially, but this is just all talk, but potentially, Bag holders, yeah, that's exactly what I'm saying. Bag holders at swing highs, Richie. So Nvidia can right now pop over the VWAP, confirm, and then start coming right back up. And it may
Hmm.
do that towards the end of the day. Okay, because the numbers were not bad.
No, they
And again,
weren't. Yeah.
no, no. Um, my concern right now is to make sure that we are not down over 1.5%. And I want to teach you guys something important. I try to teach this to Matt all the time. And I was showing this to Richie today. I want to teach you guys this. This is something that took me many, many years to figure out on my own. And this is something that can be very tricky. Okay. Now, I'm going to teach you something right now that has a lot of value, a lot of value. So please listen to what I'm about to talk about. Okay. You may notice every morning the first thing I do when the market opens is I wait a few minutes and I send you this. And the reason I send you this is not really to show you what each sector is doing. What I'm really trying to do is showing you if any sector are beyond random, up or down beyond random. Okay. And there's a big reason for that. So let me give you a scenario and I'm going to explain this to you. Okay. And nobody's more guilty of this than my assistant. Okay. Nobody's more guilty of this than my assistant. So we'll be watching The Spy. It's true. We just had a conversation about this before going live here. So, and I do this. Everybody makes this mistake. It's an easy mistake to make. So you're watching the market. You're watching The Spy, right? Okay. I'm not. I haven't changed topic. I'm still talking about this. I just want to show you an example. You're watching the market, and you're seeing a market selling off, and you're like, "Oh, okay. Ooh, this is great. It's making a lower high, and when it gets here, I'm gonna go long, and hopefully it'll revert back." That's all great, but the problem is if you rely just on the chart, right? This chart right here, does it tell you without looking up here? Does this chart tell you if the spy is down, if the Dow's down, say 800 points versus 100 points? It doesn't, does it? It's just a pretty picture, right? Okay. So sometimes I'll look to the right and I'll see a pattern like this, breakdown and a recovery, and Matt will go long. And I'm not picking on Matt. I do this, Richie. We all do this. We all do this. And I want you guys to be very cognizant of this, okay? So what happens is this. You get a confirmation and you start going long. But what you're not seeing is the fact that the Dow's not down 100 points, which is random. The Dow's down 1,000 points. And when the Dow's down 1,000 points or the S&P's down 100 points, it's much harder for the market to get back up. Or if the market's up 1,000 points, which doesn't happen often, it's much harder for it to go back to zero than if the market was at 100. Okay? What you need to do is you need to create a pullback threshold. And this is something you should always keep in your mind. Now, remember when we did the gap study last week? And I showed you that if you have a gap and it gaps down on low volume or regular volume, 1.5% or less, there's a really good chance that gap is going to fill over the next few days. But if the gap down or if the move down is over 1.5%, then the odds of that gap bouncing back are much lower because the market is not random at that point. Okay? When you're looking at a chart, the chart will not tell you that information. The chart will not tell you right now, hey, this is a really, really bearish day, or this is just a choppy day. The chart just shows you a pattern. So you always have to look here to see if the sector that you're in or if the main market is down over 1.5%, because a move over 1.5% increases the odds that move is going to stick versus bounce. If I see a chart like this, just this right here, and I look at the market and the market's down, I'll just use the Dow because most people are familiar with the Dow. The Dow's down 60 points. This will not mean anything to me. But if I look at the Dow and I see the Dow's down 1,000 points on this chart, it's going to mean a lot more to me. So looking at a chart without knowing, are we down over 1% or down, it doesn't have nearly as much context. Okay? It doesn't have nearly as much context. Very similarly, if WDC went down here this morning, I would not be buying the stock waiting for a pullback. You understand? Remember what I always try to teach you. Small cuts, paper cuts heal much faster than when somebody takes a big sledgehammer and starts knocking you on your arm. You understand? Most folks, most traders who haven't been around the block, they don't understand that. They're like, oh, it was a 275. Now it's a 250. I'm going to make millions. No. That means the more that it broke down fast, that means the price is going down. That means nobody wants it at your old price. So you have to understand, and you have to start developing a feel for when the market is choppy and when the market is trending. And you can't tell that only by looking at the chart. You have to know how much absolute levels we went down. So again, Matt could be trading this exact same pattern. And I look at the market and I see that the Dow's down 1,000 points and I'm going, oh shit. This pattern is going to be really difficult for this thing to bounce back. Whereas he's trading the exact same pattern and the market's only down a fraction of that. That pattern will be much more likely to bounce. Now, what I'm explaining to you right now, it may seem a little complicated. It's really, really important. It's really important. It's so important that it's the first thing I show you every day. And the longer I've been doing this, the more I pay attention to this. You can't just look at a chart without looking at the bigger picture. You got to look at where we are. And I even told Matt, I said, you should put a little ticker, like a little scrolling ticker on your computer so you could see, hey, we're because you see, here's the thing. If a Dow's down 100 points, that's a random move. The odds that it'll come back are 75%, 80. If the Dow's down 1,000 points or 800 points, that means there's some real institutional selling pressure. So the chart can look exactly the same. Okay? Exactly the same. So, well, Roger, I'm just looking at you've heard that before. I just look at the chart. Well, yeah. And so do I. Yeah, that's great. But you have two stocks that are making bearish flags. And they're two tech stocks, and the NASDAQ is down 5%. Those things aren't coming back up that fast. Whereas the NASDAQ is only down, say, 20 points. They're probably going to bounce right back up. Folks, this took me years to figure out and understand, and I'm explaining it to you so you don't have to go through that time. Okay, this is really valuable stuff. Basically, what I'm trying to say is a chart is not just a chart. You got to look at you got to start looking at some values, okay? At some values. Because remember, we go down here, 75% chance we're going to be up here. We go down here, only 20% chance we're going to come up here. We're going to come back. You understand? So not all charts are created equal. Not all moves are created equals. Yeah, you ain't going to learn this in any book. You're not going to learn this in any book. And I see folks doing this all the time. But Roger, it's just the stock is just coming down to the 8-day pullback. You say 8-day pullbacks are okay. Yeah, but the Dow's down 1,000 points. That's not the pullback you want to trade. You guys understand? This is really important. So what are those levels? Typically, beyond 1% is, beyond 1.5%, that's a real move. Mm-hmm. So 1%, 1.5%, that's a real move. And you'll notice today, if we look at, we're tethering on 1.5 on technology all day long. All day. We've been going between 1 and 1.5. And I'm watching this really, really carefully, because if this goes down to 2%, it's going to be much harder for it to come back up than when it's down 1.5%. And I don't mean coming back 1%. Obviously, if it goes down 3%, it's going to be harder for it to come back 3%. That's not what I mean. I mean start bouncing, the act of bouncing. Okay? So thanks, Karen. So again, please understand what I just said. It doesn't cost you anything to do that. be mindful of what the absolute market is doing when you're trading technicals, because unfortunately the technicals don't say, hey, the Dow, keep in mind we're going down, but the Dow's down 1,000 points versus the Dow's down 100 points. Okay, just wanted to make sure you guys all understand that. It's really, really important. Okay, really, really important. Because charts, unfortunately, they lie to us. You see a chart pattern, you're used to a chart pattern, you get so fixated on the chart pattern, and you forget to look and see. It's like you're going on vacation, and you're going to somewhere real, real warm, and you get so excited, and you bring all your shorts, but what you forget is that you have a flight over in New York. And it's winter and it's 20 degrees at the airport and you're wearing your Hawaii shirts and you're going, that's what I'm trying to tell you. Don't, don't always always look out the window. Always look at the temperature 5 days. Look at what the market is doing. And 1% and 1.5% are the two levels that you need to really pay attention to.
And Roger, some people are asking some questions about timeframes and things. Largely, you're doing that analysis on the daily, aren't you?
This is intraday. Just
intraday. Okay.
Intraday is the Dow down. How much is? And
yes.
I usually just look at each sector if it's down 1 to 1.5%, and I like to look at the Dow Jones because the Dow Jones is it. People are familiar. So anything over 150 points on the Dow is fair game. Anything less than 150 points on the Dow is just noise.
It's just
that's
noise.
why.
Okay.
That's why in the morning. The first thing we look at is those futures, and I say to you, hey, this is just randomness, or hey, there's meaning behind this.
Mm-hmm.
You have 10 times higher odds of it coming back up, or assuming it's a down move, if it's a random move versus a real move. Because what happens is there's a threshold, and what that threshold is telling us is if we can get down to this level, there's some real sellers coming in. And if there's some real sellers coming in, they're usually not just going to sell everything at once. They're going to start selling it continuously. And if they're not there, then this is just all minute selling pressure that'll go away and walk away. Okay,
Sure.
So again, please be I'm giving you real good techniques and tricks and tips right now from professionally doing this for decades. This is not something you're going to read in a book. I've never seen anyone ever talk about this, ever, ever, ever. I've seen of people saying if 1.5% or, but they've never put it together like I'm putting it together for you.
Mm-hmm.
Okay. All right.
No, it's fantastic. And Roger, the add-on question to that was when you're looking intraday, I know a lot of your analysis is on 5-minute charts. I would be getting the same thing if I looked at an hourly chart, wouldn't I?
Yeah, similarly.
Similarly, yeah.
Yeah, you see, one of the things our charts don't tell us, intraday charts, regardless of what time frame you're looking at, they're not really telling us what the benchmark is doing and where it is. You see, a pullback is a pullback, a breakdown is a breakdown, a breakout is a breakout. But a breakout when the Dow's up 30 points is not really a breakout, it's noise. And you see a big stock breaking down and the Dow's flat on the day, unless there's something fundamental with that stock, it's going to bounce right back up.
It's going to bounce back. Join the family, rejoin the family. Yep.
Exactly. So again, I just want you guys to start looking at and again, I make this mistake. Matt makes this mistake. A few times I've had to say, hey, I need a rolling ticker so I could see what the Dow's doing in real time see with my sectors, I have them right here. Mm-hmm. And I looked at them like every hour I look at this right here. See how tech is now down 134? It just can't seem to get beyond 1.5 and nothing else is up there. So what this is telling us is that all the sectors in the market except for tech are random right now. So if this goes to 0.84, for example, then you're just having a random noise. Random noise is just this. There's no push behind it. That means the odds of reverting are much higher. Again, none of these things are going to make you a billionaire, but together, when you put all these things together, they start making a lot of sense. And most importantly, it'll keep you out of trouble and it'll keep you from fading moves that are real versus random. Random moves are great to fade. Real moves are not great to fade. You need to understand the difference between a real move and a non-real move. Because look, here's why. If anybody ever bought my full-time trading class, then I'm going to show you something and you'll have an aha moment. What do I start my full-time trading class with? And I spent about 15 minutes on this. Do you guys remember that? That's your 1% or your 1.5% right here.
Mm-hmm.
Do you remember that? I talk about this pattern for about 10 minutes, 15 minutes when I start my full-time trading boot camp. What I just explained to you in a nutshell is this pattern. When you get beyond a certain level, you tend to stay at those levels, or you just chop around the level. You understand? That level is 1% and 1.5%. Okay? What I just did was explain this chart to you in a different way. That's all I
Mm-hmm.
did. It's the first 15 minutes of the full-time trading boot camp. And I told you that the first thing you need to do is memorize this pattern because you're going to see it over and over again. Here, I'll draw it for you again because this is so sloppy. This is your random range. When you're in a random range, you're just doing this. When you break out of a range, that's your 1.5%. You start doing this. Don't go shorting the market when you're here. Short the market when you're here.
When you're there.
Understand? Don't go
Yeah.
long when you're here. Go long when you're. Don't go long over here. Go long here. Once you break beyond that level, you're much more likely to have a directional move.
So, Roger, when you're analyzing the market this way, the market being the SPY or the Dow or whatnot, I think what you're saying, or let me see, I want to make sure I interpret your statement correctly. Are you suggesting that if the Dow, for example, is 2% and it's down, you're saying just be a little suspect if you're looking to trade a Dow stock, for example, in the opposite direction, because it's
Yes, in
going to
the
want to rejoin the circus. I mean, it will.
exactly,
Yep.
exactly,
Hmm.
exactly. Basically, what I'm saying is that all stocks and assets have certain random territory.
Yep.
If you're trading random territory, reversion trades are okay. Once you get out of that random territory, you don't want to trade against the trend. The problem is a chart won't tell you that. You have to actually look at the absolute numbers. Okay?
Perfect.
I want to make sure you guys understand that. Okay? Just want to make sure you guys understand that. Okay. Let me give you stocks that I'm looking at. I wasn't planning on talking about this, but this is really, really important. So I'm glad we discussed this. So let me give you stocks that I'm looking at, and then I'm going to have a little session. But fortunately, we have the same session tomorrow, so I'll be able to do 2 days on it. So my short stocks, TCOM, and I gave you these earlier. TCOM, Tesla, Hog, Boss Hog. Remember book Dukes of Hazzards, Raleigh?
Yeah, I do. In his white suit.
Boss Hog. Man, I loved that show. It
I
was
loved one person on that show.
Boss Hog or Daisy
Daisy.
Duke. Yeah, you like Daisy.
Yes.
She didn't age very well. She didn't
No,
age
but she
well.
was fine then.
She was breathtaking. I had a big crush on her. So it was Friday nights and it was CBS and it was Incredible Hulk and then Dukes of Hazards. And I used to be at my grandparents' house watching it like a hog. All right. Memories, memories, memories. Uh NTES, nice breakdown right here. Nice breakdown. A, nice breakdown. GNRC. Oh, wrong. Watt. This one, okay. So you see how wiki it is? This is like exemplified wikiness. That means that every time the stock goes up, it gets slapped. Every time it goes down, it gets slapped. Just the stock is just really choppy. When you see a lot of wicks, you don't want to be around. It's not really great. Okay, wicks are not really great. Okay, so this is not that great of a stock. Just saying. Now let's look at the upside. That's a nice look, and it's now above the 50-day moving average. It's coming back up. Nice consolidation pattern coming back up. Can't say anything bad about this stock. eBay. Same thing, same pattern. But look what happened. It tried, wicked out right there. So I would want to see it close above the 50. Okay. Thanks, Vince. Um, APA. I like the stock. Actually, it's one of the few stocks that I really like today, and it's bouncing off the VWAP right now. The only problem is it's really, really big. It's driven right now by the whole Iran thing. And if Iran, we don't know how Iran's going to go. So that's the problem with commoditized stocks right now. We don't know how things are going to go, and it's very wicky, which, as you already know, means it gets slapped around a lot. But it is bouncing off the VWAP, so it's got you technically have a trade right now. You could put your stop loss right here. Your risk would be from here to here, and your profit target would be right here at the high. That's one of my favorite stocks today. Just to show you how bad today is, if that's one of my favorite stocks. CSX. That's a very nice swing trading stock. See, I would buy this right near the 8-day on a pullback. PPL. Nice look. Oh, nice. It's an A line, actually, Matt. Did you know that?
Mm.
Yeah, take a look. Right up your alley. Yeah, very good trend, Cyrus, on CSX. Very nice trend. KMI, really nice trend. These are not great day trading stocks, but they're really nice swing trading stocks. MNST, nice trend. BKR. Again, you've got the whole, you got the whole oil and gas thing going on right now. So, um, sorry, I don't understand your question, Cordial. Premium
There
Premium
were some
Plus.
people have been asking, how do I get the TC2000 and what version are you using?
I'm using the gold version, the medium version.
Okay.
It's silver, gold, and platinum. I'm using the gold version.
Okay.
Okay. Just FYI. Ross Store, another one that I really like. Again, I'm not sure about day trading any of these. Actually, I'm pretty sure about not day trading any of them. But this stock is really nice. It's been very nice to us. And there's one other one that Richie mentioned, or we both mentioned. I don't remember. We talk about so many stocks, but this one, this is one of Richie's favorite stocks. Uh, I taught him how to use the Anchor VWAP with this stock. I remember it was about a year ago, maybe more. But it's a very nice trending stock, and it actually looks like it's ready to go. The only caveat is I know this week we have a lot of earnings reporting, and this is an earnings stock, but it looks very nice. Remember Richie? Yeah, it was he wanted to exit, and it just passed the anchored VWAP, and I said, no, 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 it's breaking through, keep it, and he did, and it made more money. It was a nice trade, very nice trade. See, technology's down now 1.6, 1.6. See? And it's bringing other sectors down with it. So always keep an eye on how much the sector or the stock or the index is down, not just the chart, okay? Okay, those are my stocks for today. Now, I'm going to talk about something really important that a lot of you folks don't understand well. I always tell people that the best way to raise your odds of winning is to have multiple things lining up, okay? Excuse me. The more things you can get to line up, the better it will be, okay? The better it will be. So, in other words, let me give you like a real simple example, okay? Let's say you're trading in engulfing candles, okay? Engulfing candle is when you have two candles and let's say you have a red candle and you have a green candle, and the green candle opens below the red candle and then goes up, 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 and closes above. So it completely engulfs the previous candle, okay? A lot of people look for it on reversals, and I'll be talking about this topic a lot during the live class when we have it. I'm just throwing just to give you an example. Well, engulfing candles are supposed to be high probability candles. If you test them out on their own, you're going to be disappointed to find out they have accuracy of roughly 50%. So it's toss of a coin, up or down. But what if you take a engulfing candle and you put the engulfing candle near the 50-day moving average? Ooh, the odds now go to 64%. What if you now add to that engulfing candle 5 down days before you're looking at an upside move? Now you're in the 73% range. You see how I took something that was random and I added a couple of conditions to it, and I took a random event and I turned it into a non-random event? I'm guessing, but I'm guessing that if that engulfing candle was near an 8-day EMA and the 8-day was above the 15 and the ADX was higher, our win rate would probably go into the mid to upper 70, maybe even 80th percentile. Now, I'm not trying to teach you engulfing candles right now. What I'm trying to explain to you is that there'll be plenty of times for all this when we're live together for 3 days. But what I'm trying to teach you right now is that when you take certain things and you add them together, it increases your win rate dramatically. So I just gave you a real simple example how you can go from a coin flip to 75, 80% just by knowing certain things. And I don't expect you to know them. You're not a professional trader. Okay. So one of the things that really helps us out, and not only does it help us out, we have several systems that are based on that, is seasonality. Okay? Seasonality is everywhere. And, when I first started trading stocks, I was like, come on, stop it with the seasonality. Seasonality, I mean, like, and I was a commodity trader, right? I was like, seasonality in commodities, yes, like orange juice, and because, you have hurricane season during the certain time of year, and obviously vegetables and fruits grow during a certain time of year. So seasonality with commodities is obvious. But then I started doing back testing, and you know what I realized? You have more seasonality in stocks than you do in commodities. And the reason for that is really, really simple. And I'll explain to you a few reasons for it. Because a lot of the times, it's really simple. Commodities transpose themselves into the stock market. To give you a really good example of that, when do people buy cold medicine? December. When do people buy gifts? When do they go shopping? The holiday season. When do people buy shorts and t-shirts? Close to the summer. When do people buy pool supplies? Close to the summer. When do people buy planting supplies? Right after the summer, right? As we get into the fall, right? So believe it or not, people live their life. We live our life on a completely seasonal cycle. There's a cycle for when cars sell. There's a cycle when people buy homes. There's a cycle when kids go to school. There's a cycle for and believe it or not, if you were a retail store, you would know exactly, and I mean exactly, down to a specifics, what months or weeks are going to be profitable just based on seasonality. So for people to think seasonality, congrats, Chris. For people who think seasonality is not prevalent in stocks, they need to get their heads examined. Okay? They need to get their heads examined. For example, Valentine's window is a very strong bullish seasonal period for semiconductors. I don't know why. I have no idea why. Let me show you something. Did you know that for the next 2 weeks, 10 days, right, Matt? The next 2 weeks?
Mm-hmm.
Okay. Did you know that over the last 20 years, utilities go up 80% over the next 2 weeks, over the last 20 years? So let's say I come over your house, okay, and we're hanging out. And I say, by the way, did you know that over the last 20 years, 80% of the time, utilities went up over the next 2 weeks. You'd be like, really? I'd be like, yeah. You would probably trade that. You probably would. And what if I told you that ED and LNT, which are trending, by the way, now, over the last 26 years, because you see, I can't go back more than 20 years on XLU because it wasn't around more than 20 years ago.
Roger, wait a minute. Are those years or number of trades?
The trade only happens once a year.
Oh, it's once a year? Okay, I got you, brother.
See what I'm saying? It's a,
Yep. Yep.
I,
Gotcha.
you're right, regardless of, yeah. Matt, can you hook me up?
Mm-hmm.
Thank you. So what if I told you that Edison, over the last 26 years, goes up in the next 10 days, all the way from 1990 to 2026. This is the back test. Actually, 2000, but we started our test in 1990. But it goes back to as far back as it can go. So 26 years, 73% win rate. %73 win rate, 26 occurrences. That's a profit window for utilities in the next 2 weeks. That's and not we're not talking. Thank you, sir. Yeah, we're not talking about a small move. Look at the profit factor. That's just buying on the first day and selling 10 days later. That's called a profit window. Now, what if I take these charts? Okay. What if I take ED? Hey, look at what ED's doing. It's near swing highs with high volume candles. It would be a V an A line right here. Okay. How about LNT? Ooh, LNT's making all-time highs. There's no resistance. There's no overhead resistance here. And in the last 26 years, over the next 10 days, by the way, this is live. And I had Matt do this 2 hours ago. I'm giving you red meat right now, whether you know it or not. You better have a piece of paper and for the next and a pen for the next hour, because I'm going to give you a lot of red meat. So what happens if I'm thinking of buying ED or LNT and I see that we have a strong 10-day seasonal period? That's an edge right there, folks. That's an edge. Well, Roger, then how come why don't I just forget about all of your charts and just focus on this? Because it's like this is the perfect example I can give you. Seasonality without technical analysis is like drinking a Bloody Mary and not putting salt and pepper in it. Yeah. Yeah. Think about a Bloody Mary. What happens if I take two ingredients out of what if I make a Bloody Mary warm? Yeah. What if I don't put ice in it, right? Or what if I don't put any pepper in it? Yeah. It's got to be just right? Or it doesn't work.
It doesn't work.
Seasonality, my friends. Seasonality. So my point is, this is very, very important. Also, and I want to tell you something else that's interesting. Exactly, Hal. It's not a Bloody Mary. So let me tell you something else that's interesting. What I found over the years is that, and I had this discussion with you guys a few months back. I don't remember maybe about a month and a half ago. You have large hedge funds, large institutions, okay? A lot of these hedge funds, I know that you think that most hedge funds are there they're only there to give us a what's the word I'm looking for? Most people believe, if I ask you what's the purpose of a hedge fund or an institutional trader, you'll say to produce alpha, to outperform the market, right? What if I told you that 70% of institutional funds are not there to provide a profit? They're there to provide liquidity. liquidity for the market. Pension funds. Pension funds do not care about making money. They care about mimicking the market without creating ripples in the waves. See, liquidity, exactly, Cyrus. Cyrus, we got to stop agreeing. You and I agreeing it's not going to end well. All right, I'm going to close the chat now. All right. So a lot of times, folks, you will find liquidity. You will find liquidity is what the funds do. And these funds that our job is to provide liquidity, most of them, see, they don't go out of business because they're not trying to outperform the market. So they're going to stay in business forever. As long as they don't, as long they're like the whale. And as long as the whale doesn't go and make waves and just stays, and it's like Alaska, right? You go to Alaska, you go on a boat, you got the whale going below you, you got all this cool stuff. They're going to keep doing it until the whale, jumps up and like kills 20 people on a boat, God forbid, and I hope it never happens. But it's the same thing with liquidity. Unless they're causing trouble, they're just going to keep doing what they've been doing. And a lot of these funds have been programmed 10, 20, 30 years ago. So we're having seasonality, not because there's something happening in the world during that time of year. We're having seasonality because these funds are on a specific time clock, and they're buying and selling the same thing at the same time of year, and they're massive. Okay. So my point is, seasonality is really, really important. We have several programs that utilize seasonality. We'll be talking about them in a few minutes, but I wanted to introduce you to this, and I'm going to have a class right now. Now, if you like these free picks, I'm about to give you dozens of them. Now, here's the caveat. They only work on that specific day or that window at that time of year. So I'm going to give you dates for specific periods, and then I'm going to give you a brand new one that I have never given to anyone at the end of the class. But you got to stick around. Also, as I mentioned, the next 2 weeks is a very strong period for you. Now I'm not teaching you anything. I'm just letting you know that the next 2 weeks seasonally is a very, very strong period for utilities. And over the last 20 plus years, they tend to do very well. The end of February and the beginning of March is a very fertile time for utility stocks. Okay, so I wanted you guys to know that.
So, Roger, there was a quick question before we move on, and I thought it was a good one. And you said your point was, hey, if I see a seasonality stock, why look at anything else? Why wouldn't I just trade that? And you're saying, oh, wait a minute. You need to look at some other technical factors. So the question was, if there's a disagreement between seasonality and technical factor, which one carries greater weight? Or is that a situation where you're going, look, there's no congruency, just look for another stock?
Yes, you look for another stock. Yeah, you would just
Yep.
look for another stock. Yeah, you wouldn't, yeah. You want, and let me tell you something interesting. This is a true story. About 7, 8 months ago, I had a friend fly out, and we were talking about airline stocks, okay? And he's not a technical trader. He's just an investor, and he was looking to buy airline stocks because okay, I'll tell you what it was. We were talking. I remember the conversation. It was my cousin's, my wife's cousin, and he's a professor, and we were talking about Ukraine. He's really big. He goes to Ukraine. He gives them weapons. He's like really big in helping Ukraine. My wife is Ukrainian, and anyway, my background is from there as well. So he was over our house, and we were talking about energy prices. And we were talking about energy prices going down, and he's like, I'm going to start investing in some airline stocks because I think they're going to go up. And I think he was right on the trade. And he was like, I'm just going to buy a basket, like Jets airline, and hold them for the next 5, 6 years. He's a teacher. He was a professor. He just wanted something for his portfolio. And we were talking about how oil energy prices were going below a certain price. And I said, you know what? Let me check something. Let me check seasonality. And I checked seasonality. And lo and behold, total coincidence. But for the next like 3 weeks, seasonality was just awful for airlines. Just awful for airline stocks. And I said, you know what? Do me a favor. Don't go buying anything right now. Buy on these dates. and he listened to me. The point I'm making is a lot of folks are like, well, great seasonality, but let me tell you something. Let's say you have a trade that you love and you look at the seasonality and the seasonality is negative on 10 stocks 2 weeks forward. You're probably not going to buy that stock. So a lot of times I don't just use seasonality to help me buy a stock. I use seasonality to help me figure out what stock I don't want to buy or where I don't want to be.
Good point.
As a matter of fact, 7 out of 10 times, I use seasonality to help me avoid getting into trades. Because if I don't have any tailwind, this is what I call this tailwind. If I don't have any tailwind, how much am I get? And I have a $5 million boat that just have sails, but there's no wind. How far am I going to get in the ocean? I'm going to have to pedal, right? It's like having a Ferrari and having a dirt road. What are you going to do that day, right? Nothing. So you my point is this becomes very, very valuable if you know how to use it. And we created tools to make this happen. Any other questions before we move on, Raleigh?
Nope, I think that's good. And once again, Roger, I just want to share what so many people have put in the chat room that they really, really enjoyed that presentation.
Well, I'm glad to hear that.
So we have, you're on a roll here, buddy. For the last several days, you've been specifically talking about how to use options and how to read the markets and the holistic approach you need to take, before you even consider trading a stock. And so very, very well received. And along those lines, guys, I am going to post for you a link where you can see a copy of this presentation. Let me just pull that up real quickly here. And also, I just need to remind the folks that are here watching on YouTube that we're about to stop the stream to YouTube because we're getting into a presentation, and YouTube doesn't like it when we do presentations on YouTube. So you got about 30 seconds to evacuate and come join us here in the Zoom room for the balance of this incredible presentation. And folks, once again, for those of you that would like to just re-listen to this session that Roger gave you you go there, you can see it there, you go to his YouTube channel and you click on the live button and you will see the current session. It's there now. The replay is automatically generated. So with that, Roger, I'm going to go ahead and shut down the Zoom.
Perfect. And folks, if you're in the Zoom, please come in here and join us. I'm sure Matt posted some links for you guys there.
Did.
Yeah, I figured you did. Thank you. And folks, please pay attention. I'm going to talk about seasonality, but more importantly, during this presentation, I'm going to give you some real red meat, like real red meat. I'm going to give you seasonal dates for your favorite stocks. And in the end, I'm going to give you a couple that Matt and I came up with today for you. So this is loaded with value, and you could use it. Now, remember, these dates are once a year, seasonal periods. So if I say something like December,